Hi guys, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the 19th of July 2020. Now, before I switch over to my screen share and go over quite a lot of the charts that obviously you guys want me to kind of go over, and the market analysis, etc. I think something that I'm getting quite a lot this week, especially on my various social media channels and obviously email, etc., is what the hell's going on with tech at the moment. And I think when you have an understanding of sector rotation, which is something I'm going to be touching on, where the money is going into at the moment, and hopefully you guys get a lot of value from that. What I also am going to be doing today, just the end of the presentation and obviously the end of the charting, obviously, as most of you that follow the channel, I believe in open transparency with my work. I'm going to be sharing with you some key data from our membership base, how they've performed over the last 12 months. Again, a lot of you won't realise, maybe you've just come across my channel for the first time, but we have a charting research service, and I think it's very, very important in this day and age of Lamborghinis and mansions, etc., all the nonsense that you'll see posted on social media. I want to share with you exact numbers. So, like I said, I'm going to switch over to my screen share now. Hopefully you get some value from it, but please do like the video if you get some value from it. It all helps with YouTube algorithms, and if you enjoy it, please do subscribe. We'd love to keep in touch with you. So let's go and see what the charts are telling us this week. So there should be a switch up in audio here. I've just switched over to the microphone and hopefully you can all see my screen. Now, please, most of you will have seen this already, but please pause the video, make sure you're comfortable with that before proceeding any further. There's not any investment advice. Do your own due diligence. I know absolutely nothing. Now, to maybe give myself a little bit of credibility with regards to technical analysis, I'm registered with the CMT Association. Again, most of you already know this, and I'm working my way towards my chartered status. Hopefully one day I will be a fully fledged CMT. Now, if you do get some value from this, again, please do subscribe to our channel, give it a thumbs up, but let's just dive into the markets. Now, I think the overriding theme that I've had over the last, 10 days is what the hell is happening with tech. Now, if we think back over the last couple of years, we have had multiple occasions where the environment within tech drops off a little bit. We see a little bit of a sector rotation, which is what we see in bullish environments. Now, what I would say is this is the rotation graph, okay? Now, we have the improving sector, we have the leading sector, we have a weakening sector, and we've got a lagging sector. Now, something that the rotation graph helps us with is just to understand what is likely to start outperforming the S&P 500, which is the benchmark for this particular rotation graph. And as we can see, over the last 7 days, we started to see the rotation out of tech, Sky ETF, XLK, and we've seen a rotation from the lagging areas into improving areas. We've got XLU, XLF, MJ, these are just a few of the areas. Now, on the flip side of that, we've obviously got XBI there. Now, biotech has obviously been a massive outperformer this year. It's been a place that you've wanted to allocate risk. I know there's many of you that will be watching this video that keep going back to the same stocks over and over again because they've done well for you in the past. But what you have to understand is if you keep going back to these high momentum stocks where they'll quite happily rip for 20-30% over a few days, but when you get caught on the wrong side of that and you maybe buy a little high, obviously that's where the mental hurdles come in, and you're looking to sell at a loss, unless you obviously have the investing mindset where you're dollar cost averaging, etc. Now, The S&P 500, in my opinion, looks like it's potentially breaking out here of a cup and handle pattern. Now, this is a weekly chart for the S&P 500. I would like to see this level clear from a pivot that was created back in June a month ago. I think if we get a move above this level, I think we probably see the market start to rally. So if the market is starting to rally, the question that we really need to be asking ourselves is, well, where do we want to be allocating risk at the moment? Now, we're obviously coming up to earnings season at the moment. Now, these are the earnings that are due to report over the next 5 days. A few that I think should be on everybody's watch list. Absolutely, I think Tesla, there's going to be a lot of interest there. We've also got Microsoft reporting, Snapchat reporting. I'm actually really interested in Teradyne. I've done really well on Teradyne recently. But I think it's very important to have a rule set in place for earnings. I think in order to hold through earnings, especially if you're holding the underlying stock, I think you need to have at least 10% profit in order to be holding through earnings. I think that saves the hassle of any potential gap down. That 10% buffer does help, although it's not uncommon for stocks to gap down 20-30%, but I think it does help to have a bit of a profit buffer in place, unless you're playing speculative options plays in the run up to earnings that are clearly risk defined. If you're somebody that finds yourself buying stock before earnings, you're gambling, you're not making educated decisions, in my opinion, because earnings is an absolute lottery. I mean, how many times do we see it where the stock performs incredibly well and against all the fundamental benchmarks, but for whatever reason the stock market decides to plummet the individual name? I've seen it too many times now, and it's very, very frustrating. So that's why I think having the profit buffer in place and looking to action an entry with more information. I think the only way to get more information is post earnings. So I don't like to take new positions in the lead up to earnings. I wait for the earnings report to see what the market reaction is, with a view to potentially buying any discounts that may be offered there. So that's how I view the S&P 500 at the moment. I think under the hood, if you like, we've got the percentage of stocks that are trading above their 200 period simple moving average. We are currently trading at 51% of stocks in the S&P 500 are trading above that technical indicator. Now, that's obviously been a reduction from 61%, but obviously when the market crashed, the percentage of stocks plummeted. So in my opinion, market breadth is starting to improve. Obviously, the higher this can get, the better. It means that stocks are in uptrends, not downtrends. I also know there's a massive disconnect between the stock market and the economy. I'm not really here to touch on that. I think most of us understand that the economic conditions, unemployment, etc., it's brutal. I've got friends lost jobs, restaurants, bars, etc. And obviously, anybody affected, my heart goes out to everybody. But something that obviously, if we can focus on what's important, and I think what's important with the stock market is price. So that's what I'm concentrating on. Although I'm providing, bullish charts, I do see the other side of it, and I do understand that there may be a time in the near future where the disconnect starts to kind of come together, and we start to see the stock market reflect the economy. So although I'm bullish at the moment, I very much have an eye on any potential downside. I know the levels to keep an eye on within price, on the individual names, on the individual sectors, on the individual indices. So that's something that I've got an eye on now. Tech, just going back to what I was saying a second ago about the rotation, and something that I do want to just highlight as well is if you're somebody that follows social media, maybe YouTube channels, maybe follow mine, I think something that's very, very apparent, and I think it's maybe one of the reasons why I've got such a small but close following, is I don't use any of the magical hindsight indicators that you see a lot of analysts put out there to the world. Now, what the hindsight indicator is you'll have somebody perhaps on YouTube saying, that the stock market was rallying here. I made 40-50% on this stock, that stock, and I got out perfectly here because this is a signal. But what they're doing is they're talking about past price action. The stock market doesn't work like that. You need to use the data as it is at any given moment in time. So if you're following individuals that are using the magical hindsight indicators, I would suggest that the credibility of their work might be in question. But that's another opinion. But you can go on and you can go and have a look at my stock Twitter. This is actually a chart that I posted I think around a week ago. So I'm not using any magical hindsight indicators here. But we do have a very clear divergence. We've got the NASDAQ, the percentage of stocks trading above their 200 period simple moving average has also been on the decline. We've got the percentage that are 20%, within 20% of their 52-week high, that has also been on the decline. So although we've obviously had this rapid rise in tech, under the hood, there's been some very obvious issues. Now, again, if we go back to the rotation graph, what I was showing at the start about the rotation out, so this is quite clearly an area where we might want to be saying to ourselves, do you know what, let's not get too aggressive with tech. What other areas of the market are starting to move? Now, I do have some charts that I think you can focus on over the forthcoming week. I am looking at the Dow Jones Industrial Average at the moment. I think there's every chance that we break out here of a triangle pattern. Now, what does that mean for the Dow? Well, it means that you can go and you can identify the strength within the Dow, because if the Dow is breaking out, we're going to find the leaders within the Dow Jones Industrial Average will start to move as well. So I think the Dow, I think that's a place that you could potentially look. The Russell 2000 has now confirmed and obviously closed above the 200-day simple moving average. Now, is it convincing at the moment? No, it's not. We are hovering around sideways here. I would like to see a very high momentum follow through. That would give me more confidence that the market is going to continue to rally. But even if the market doesn't rally, and let's say the Dow doesn't follow through, let's say tech continues to follow through, continues to fade away, and let's say the S&P 500 doesn't confirm a cup and handle breakout, there are other areas of the market that you can look at. Now, one of those is most definitely gold at the moment. I think with gold now breaking out above a base dating back to 2012, that's not a bearish development. So what you can look at there with gold is you can look at the stocks aligned with gold, perhaps the gold miners, the junior gold miners. Those are areas that I think you can probably look at. Exactly the same with silver. Silver, it's not bearish that it's potentially breaking out of a base dating back to March 2014. So again, if you are looking to identify the areas of the market that maybe don't carry the same risk as the high momentum names that you might be used to, you might want to start to look at the names aligned with silver. One that comes to mind, Pan American Silver, might be a stock that might be of interest. Again, do your own due diligence, figure out what your risk tolerance is, figure out what you're ultimately looking to accomplish with the markets. Everybody has different goals. Hopefully you get some insight and this is helping in some way. We've also got the Treasury Bond ETF TLT. Now, I've had a lot of questions about this, and in my opinion, again, this is a chart that I've posted to social media recently. I'm not using hindsight indicators. We have lows, we've got higher lows. These are characteristics of uptrends. Now, if we continue to rally here, I think if TLT can move above this level here, around 169, I think that might be a catalyst to TLT for it to get a bit more momentum and for the price to start to rise. So that might be an area of focus as well. Now, on occasions, if the market declines, TLT has an inverse correlation. So what we can find is the stock market might be dropping and TLT might rise, but there are other occasions as well where they run in tandem. So it's not out with the realms of possibility that TLT moves with the S&P 500 higher. So very much, got an eye on this level here, and I think that's one that you might potentially look to add to your watch list. Volatility is obviously elevated at the moment. I think most of us understand this. What I am enjoying at the moment, and what I enjoyed last week, was the declines that we've seen here. Something, again, to understand is a lot of the time volatility is used as, I guess it can be a distraction. And the reason why it can be a little bit of a distraction is because if you're in individual names that are being affected massively by the volatility, it can actually take you away from the focus and the understanding that the stock market is actually going up. So what I mean by that is, if the market is obviously having that nasty period where we have these wild swings, if you look at what's actually happening with the S&P 500, what we've seen last week is the S&P 500 was actually rising. So that was the indication that we were just seeing a bit of a sector rotation. So again, the money is going to come back into these tech names, the high momentum names. Absolutely it will. But again, if you're somebody out there that struggles with this, again, that might be the difference between, having a massively outperforming year against, having maybe a low performing or a losing year. So again, it's these little nuances that I think are very, very important. And I think that's obviously where, having, access to professional charting, helps. So where should we also be looking? I think healthcare is an area of focus. Again, it's not a bearish development. We're moving and closing at all-time highs. Again, I got a lot of heat a couple of months ago when I posted a bullish chart for biotechs. In the last 6 weeks, biotechs have risen 18%, and I'm doing very, very well in a couple of the names. GMAB is one of those names, and I think these are areas that just make a lot of sense at the moment. Again, you don't need to overcomplicate it. We're looking for strength in the market. It's easier to buy strength than it is to buy these perceived discounts. So again, XLV I think should be an area of focus. XLY, again, consumer discretionary, does look like it's closing above previous resistance here, so it'll be interesting to see what happens with consumer discretionary over the forthcoming week. Couple of names, I touched on healthcare a second ago. Again, ABBV is one of those aligned with XLV and XBI. So again, I like ABBV above 102. And we also have Microsoft. Now, there's obviously earnings coming up this week. We're in a long-term structural uptrend. I don't see any reason why that would change. I like Microsoft a lot. I've recently moved myself from Apple, and I'm using the Surface Laptop 3, and I love it. So I love the Microsoft product. I love the company. So hopefully earnings reflects this, and hopefully we start to see a bit of a move higher here over the next couple of days in the run-up to earnings. So hopefully you've got some value from this, but like I said at the start, I'm going to be sharing with you now some key details and some key metrics. I think in this day and age, like I said at the start, where everybody's posting Lamborghinis and mansions, I think it's very, very important, especially with the line of work that I'm in, that there's a true communication of work and obviously the impact that I guess the work has. Now, 10 days ago, I put out a survey to our members. Now, we have a lot of members now, and I put out a few questions to them, and I'm just going to share with you the results because I do believe it's probably one of the best in the industry that I work in. I don't know anybody else that opens up their work to as much scrutiny as I do. But I asked a very simple question. Have you made the leap to becoming a more consistent and profitable trader since joining our platform? Now, I opened up our annual membership just back in October. It's something that everybody was asking for a couple of years. And I had concerns because I wasn't sure if I could provide a platform that would replicate the same results as what I do with my one-on-one clients. Now, it's very, very important. 70% have obviously said that they're profitable. 16% have said yes, but they were already profitable, and there's obviously 13% there that are a no at the moment. Now, obviously, I've dug into this a little bit more. Now, one big reason, in my opinion, for this, and I think when you go into the numbers, 80% of that 13% have not been through our technical analysis program yet. So I think that's an area that's obviously something that I think the individual members could look at. But I am absolutely astounded by this. Our annual subscription group, 86% are profitable traders. 92% value my insight into the overall market, which is what you've just watched at the moment. It's helped many of our members over the last 8, 9, 10 months. Again, I'm going to share with you a couple of metrics there. Would you be happy to recommend? 84% would be happy to recommend. The 13% are maybe at the moment. So again, very, very happy with that. Do you enjoy the Honey Stocks trend following approach? 97% of our members enjoy the approach that we have. But one of the things, and I guess most of you that have obviously followed my channel and obviously followed my work over the last few years, understand that when the market crashed recently, I was putting out content, put out videos to YouTube to help everybody get defensive ahead. 76% of our members got defensive ahead of the stock market crash, and that has then enabled those members to go on and have massively outperforming year. So what we do at honeystocks.com, and it's obviously an annual membership that we provide, but you get full access to our technical analysis program. I think you can probably see from the results that you've just seen just how much of an impact that has. We have our trade ideas. Again, I don't know anybody that's open and is transparent. I'm going to be going over that in just a second. We've got our weekend analysis that we provide. We provide our halftime report, which is a midweek analysis. We've got an incredible trading community. We've got chart requests, and we also offer referral discounts as well. But what I guess most that watch want to know is, why do I have a membership limit? The reason for that is I don't have any grand plans to have the biggest trading community in the world. I couldn't think of anything worse. For me, time to enjoy life is more important than making hundreds of thousands of dollars in subscriptions. Again, it's an annual membership that we provide. We don't provide a monthly membership. Again, the reason for that is the intakes would be too high. The easiest thing for me to do would be to open up a monthly membership, but the numbers would just be too great, and I couldn't think of anything worse. So if an annual membership is something that appeals to you, feel free to go and check out our website. But this is what our trade alerts look like. This is a recent one for NVTA, which everybody has recently been stopped out of because of the nonsense with tech last week. But you know, the alert went out here saying we want this to happen. What happened? We just got an immediate move and stopped out, I think $32, $33. A huge win. Zscaler is still paying. That's up at $120 at the moment. We've got Pan American Silver. Again, I touched on that just a second ago. We sent an alert out at 23, and obviously that's up at 31, 32 at the moment. But we also provide charting requests. Again, this was a chart that was provided to our members on the 16th of April. Again, above $100, and this is up at 200 plus at the moment. But I also log every single trade idea that I've ever put out to our community and subscribers and clients. Again, I think it's very important, because the charts that we're providing, we don't provide penny stocks. We're not day trading. We're not day trading gurus. We have a mid-term time horizon in our approach. So if you're comfortable with holding for a little while and using technical analysis to facilitate better decision making in the market, and maybe you want to learn technical analysis, you could find worse platforms, I think. But there's Rob, $45,000 profit in June. There's Arpan, $800 profit. David, $12,500 profit. Jamie, 150%, 50% account growth. The list is really endless at this point. So I think if you're looking to get away from day trading, I think if you're looking to learn technical analysis, maybe you're just too busy to filter through thousands of stocks every week to find the best ones. Maybe you'd like to be part of a successful community. Maybe you appreciate clean charting. Maybe you'd like access to a professional chartist. Again, we might be able to help you in some way. But I think if you have any questions, and feel free to reach out to me. But there is a few links below for you. If you want a 30-day free trial of our Optima software, again, there's a link below for that. But if this looks appealing to you in some way, again, there's a link below. All you need to do is register your details, and we will be in touch with you at some point over the coming days. So if you stuck around to the end here, thank you very much from the bottom of my heart. Enjoy the rest of your weekend, stay safe, and what we're doing here in Scotland is social distancing, and it really does make a difference. So stay safe there, and maybe we welcome you soon. Thank you.